Hello guys, and welcome back to another video of my forex trading journey. In today's video, I'm going to be sharing with you how I study the market or how I study the chart as a beginner forex trader. During the course of my studies and demo practices, I learned a lot of things, and before I take a trade, I have to make sure all these things are observed before I enter into a trade. The psychology involved in trading, the discipline involved in trading, looking at confluences before you enter into a trade. So I'm going to be sharing with you today. Subscribe to this channel if this is your first time. Hit that like button so that others will benefit from this video. Okay, so in the course of my studies or in the course of learning forex, I got to know that there are diverse time frames that a lot of people consider or traders consider in taking trades. According to the ICT concept, we have position trades or traders. They look at the market from the monthly time frame to the weekly time frame all the way to the daily time frame. That is where they take trades. And we also have the swing traders. The swing traders also look at the market from the weekly time frame to the daily time frame, and then they take trades in the 4-hour time frame or the 1-hour time frame. We also have short-term traders. Short-term traders also look at the market from the 4-hour time frame, the 1-hour time frame, and then they take trades in the 15 minutes time frame. And if you are scalping, you also consider time frames like the 1-hour time frame, the 15 minutes time frame, and the 5 minutes time frame. That is where you're going to spot opportunities and then enter into a trade. Okay, so for me, I started learning using the 4-hour time frame, the 1-hour time frame, and the 15 minutes time frame during my demo practices. So I think that makes me a short-term trader, and this is what I do before I take a trade. So as a beginner trader who doesn't want to keep blowing accounts, I'm very cautious and careful whenever I'm taking trade. I also consider my psychology in trading, the discipline in trading. I have all these things at the back of my mind. So before I open a chart for analysis, I look out for news. Okay, news that are negatively affecting currencies or positively affecting currencies, and the time basis these news are coming into the market or are coming to fall into the market. So whenever I'm in a trade, I'm careful that I know that this particular time there is a news coming into the market. Is it positively going to affect the market or is it negatively going to affect the market? Okay, so I take note of all these things before I do my analysis. Okay, so when I open the chart, I go to the 4-hour time frame and the 1-hour time frame and all the way to the 15 minutes time frame. So with the 4-hour time frame, I look out for confluences like the trend of the market. What's the market telling me? Is the market in a downtrend or is the market in an uptrend? So in the 4-hour time frame, I have to get this down. So when, for instance, I open the 4-hour time frame and I know that the market is either in a downtrend or in an uptrend, I go to the 1-hour time frame and to see the same thing, to see if I can see the same thing what the 4-hour time frame is telling me. Is it the same thing going on, or is it the same thing happening in the 1-hour time frame? Then I go to the 15 minutes time frame and patiently wait and then take trade. So for instance, if the market is telling me a downtrend or showing me the downtrend in the 4-hour time frame, I should be able to get that same downtrend in the 1-hour time frame, and then I take it from there. Okay, so in the 1-hour time frame, I mark out my key zones, my key levels. That's the support and resistance levels that has been tested more than twice or more than once. So if the market is in an uptrend, I'm only looking for buy opportunities. There's no way I'm going to enter for a sell. And if the market is in a downtrend, I'm looking for sell opportunities. There's no way I'm going to enter for a buy. I have all these things at the back of my mind whenever I open the chart. And then after marking my key levels, my key zones, and then spotting these zones, knowing that the market can come and retest or test these levels, I take note of these levels. And I also consider price actions like candlestick communication to me as a trader. So, for instance, in a downtrend, okay, in a downtrend, I look for candlesticks. At the end of a downtrend, I look at candlesticks like a dragonfly doji, which signifies a momentum of buyers coming into the market. In an uptrend or at the end of an uptrend, I also look at candles like sticks like a dragonfly bearish doji. Yeah, let me call it that, a dragonfly bearish doji, indicating that sellers are also coming into the market. Also, bullish engulfing candlestick in the downtrend or at the end of the downtrend, when I see a bullish engulfing candle, praise the Lord. In at the end of an uptrend, when I see a bearish engulfing candlestick, that one too, I'm good to go. I also consider a doji candlestick signifies an indecision in the market. With this one, you don't know, the market is indecisive. Nobody knows where the market is going to go. Whenever you see a doji candlestick, there is indecision in the market. You take note of that. So there are several candlesticks that I take note before taking the trade. And in the 15 minutes time frame, I patiently wait for all these things before I take a trade. All right, so I will take you to my chart and show you how I do these things practically. Okay, so guys, I'm gonna show you how I do my analysis before I take a trade. Okay, so stay with me. I'm in the 4-hour time frame. Okay, and this is the behavior of the market in the 4-hour time frame. It is showing absolute a downtrend. The market is in a downtrend. So when we take a trend line and draw it, we can see that the market is in a downtrend. All right, so let's go back to the 1-hour time frame to see what the market is telling us here is in line with what the 1-hour time frame will also tell us. So in the 1-hour time frame, we are seeing this. The market has shown forth a downtrend, but there is this dragonfly doji here. So you see immediately after this dragonfly doji indicating an end of a trend, indicating the end of this trend, there is this 3 bulls that came into the market. Okay, so in the 1-hour time frame, that's where I mark out my key zones. So let me this is one of the zones. Oh, sorry, I picked the wrong. Okay, so this zone has been tested, but how many times? This zone has been tested. So 1, 2, 3, 4 times. This zone has been tested 4 times, and so we can take note of the zone. This is the previous high of the market, immediate previous high of the market. So we can mark out that zone. There's another one here. There's another zone here. Okay, so we can also take note of the previous low of the market. All right. So there's another one here. You can mark like several key zones, but this hasn't when we put the chart back, we can you will see that that level I just marked has also tested something, but we have to push it all the way back, but which is some I mean some kind of stress, so we just consider the one just here. So you see what the market is doing here. So this showed forth an uptrend, and then suddenly bears came into the market with this big bearish candlestick. So the market can behave like it can break this structure, come retest it back, and then drop off, or sorry, or the market can be expected to give us this no, can be expected to give us market can't do this. It can just come back here, do this, back again, and give us a double bottom. Okay, market can do this and then shoot up either to this level or the next level. So the market can actually do anything at all. So what I do is I always follow the candlesticks. What the candlestick is saying in the trend line. Okay, so we know we are in a downtrend, but when we go to the 15 minutes time frame, let's go to the 15 minutes time frame and see what is actually happening. So in the 50 minutes time frame, you can see that the market is choppy, some kind of consolidation. So let's take note of this level. So I take note of I also take note of this level here that has been tested like 3 times. So at this point I will be expecting a breakout. So from here I'm expecting the market to either come here and break this structure and I can enter for a buy, or I'm expecting the market to break this previous low, retest it back and drop off again. Yeah, so this is how I do my analysis before I enter into a trade. Okay guys, so this is how I do my analysis before I enter into a trade. So I'm going to try to be growing a $24 account into a $50, into a $100 and more, and not going to be able to blow my account. I'm going to be updating you on how my performances is going to turn around. See you in my next video.